nuclear financing, from an advisory perspective, is not a one-size-fits-all proposition. There are many different risks. I think when you say nuclear risk, you're really talking about, I think it's big on a lot of people's minds, is construction risk, cost overruns, looking at technology risk. I think technology has now been, nuclear technology has now been in the popular press. I don't think before March 11th people were talking about BWRs versus PWRs, or Mark I containment system versus, Mark IV containment system. In terms of Citi's experience, I'm fairly new to this sector, but institutionally, we were a co-advisor for Entergy's spin of Annexus, which was canceled in 2010, mainly due to market conditions. And I think that's a point I'd want to come back to about economics and how that drives things more than it just being nuclear. I think economics plays a big role in this. We were a financial advisor in Eagle Rock's attainment of its DOE loan guarantee. We were MHI's advisor in the Luminant JV. In Europe, we were an advisor to one of the investors in TVO in the Olkiluoto 3 project. Tangentially, we're an advisor in Saudi Arabia to very large, gas-fired plants, their IPP process out there, which I make that point in saying that the financing markets will look at large dollar amount projects with a lot of complexity. I think it's just a matter of how those risks get nailed down, who are the parties that share those risks between host countries, between potential ECA financing, between the vendor, between lenders, equity investors, the operator, the PPA off-taker, and how those risks get structured.
While we're talking about this, I'd like to ask